Imagine waking up one morning and realizing your credit card company just bought an entire bank. And not just any bank, but one that owns its own payment network. Scary? Exciting? Maybe both. Capital One just pulled off a $35.3 billion move that could change how you bank, borrow, and swipe forever. And if you think this is just corporate drama that doesn't affect you, think again. What's really happening behind this mega merger, and more importantly, what does it mean for your money? Let's break it all down. On the surface, it's just another headline. Capital One acquires Discover for $35.3 billion. But underneath, it's a seismic shift in U.S. banking. Capital One, already a credit card giant, is now becoming the eighth largest U.S. bank by assets. That's nearly $638 billion in assets and control of 2.2% of all insured American deposits. It's like Chase, Amex, and Wells Fargo suddenly got a new neighbor at the high-stakes poker table. And this new player just grabbed a chair with its own chips, table, and rules. Wait, did you just say chips and table in a banking video? Yep, because money is the ultimate game. And Capital One just raised the stakes. But why now? Why Discover? And why does this feel less like a partnership and more like a power move? Let's talk strategy. And it's genius. Discover isn't just a credit card company. It owns its own payment network. One of only four in the US, alongside Visa, MasterCard, and American Express. By acquiring Discover, Capital One doesn't just get new customers. It gets infrastructure. It gets leverage. It gets independence from the Visa/MasterCard duopoly. Translation? They now control both the card you use and the rails your money moves on. It's like Uber buying the entire road. This could lead to lower transaction fees, faster innovation, and yes, more competitive credit card offers. But that's only if it doesn't go the other way, because every revolution has consequences, and this one might be coming to a wallet near you. Here's where things get real. Discover isn't squeaky clean. In fact, it was just fined $250 million for overcharging and shady fee practices. And now that baggage is Capital One's baggage. There's also regulatory pressure. With this merger, regulators are watching for monopolistic behavior, anti-competitive tactics, and how fairly these companies treat you, the everyday consumer. So here's the deal. You might get better credit rewards, or you might get hit with new hidden fees. You might see new financial tools launch, or find yourself stuck in a system with fewer choices. It's a high-risk, high-reward moment for the banking industry, and for anyone who wants to master their financial future. This merger isn't just corporate news. It's a wake-up call. Your money is moving. Are you paying attention? So, what should you do now? Start comparing credit card terms. Pay attention to how your bank handles you. And remember, financial freedom starts with awareness. If this merger proves one thing, it's this. The game is changing. And the smartest players don't just react, they prepare. And speaking of big shifts, have you seen how one viral moment flipped a regular girl's life upside down? Tap here to watch. Tuah Girl, how one viral moment changed her life. Because sometimes one decision can change everything.